Christian, yesterday there weren't really any winners in the market. It was a pretty wide sell-off, not the deepest, but only a couple companies made it through. So will we continue to be able to have certain stocks buck the trend if we do go lower in the overall market? What do you think?
Hey, great to be here. And yeah, I mean, one of the things that I'm watching this morning is the VIX. I think for that kind of separation trade to continue, the haves versus the have-nots, really want to see this VIX kind of, chill out before it gets to 40. I think if we go above 40, then we could have a little bit more of the same from what we saw yesterday, where there's downward pressure and volatility is higher on a lot of stocks. But I think if we kind of stay in here and volatility, chills out, then we can go back to that, essentially the have versus the have-not market, where some stocks are going to do well and other stocks are, just not in a great spot in terms of this current environment.
I like the way you described it. I heard separation trade, I think, in there. I like that term, as kind of dividing this market between the stuff that really needs the economy to reopen, the companies that have been doing okay without it. How long can a separation trade make sense, Christian? I mean, if we have this big bifurcation again where all the reopening companies start dropping, should we eventually expect that to drag on the NASDAQ, or are we just going to have a totally different environment?
Well, yeah, I mean, I think we're kind of a little bit in the unknown, right? I see a lot of notes where people are talking about that, hey, this has never happened before, market breadth is really weak. This NASDAQ is really running, versus definitely SPY and even to a bigger extent, IWM. But I go back to, well, we've never really had one of these environments before. I mean, my office is in downtown New York City, and, I walk through as I commute into work, and just to kind of look at businesses and coffee shops, and there's just not a lot of foot traffic. So that's going to continue. And I think as these COVID cases continue to move up, and the work at home type of trade, people are going to continue to work, but it's going to be in different places. It's going to be, things like Microsoft and various different tech areas, I think, can continue to outperform in this environment because those areas are doing pretty well versus a lot of other areas, unfortunately are getting hit pretty hard.
Christian, let's talk some stocks, and let's go to a sector first. We heard earlier this morning the case from Shiraz Mian at Zacks about earnings, and that one of the few areas of stability with tech is medical companies, medical devices, and XBI, the biotech ETF, is at the top of your list here. So tell me what it looks like on the chart right now to you.
Yeah, so XBI, we started to see this on Friday, and I jumped into a trade, and I wasn't particularly specific. I actually just bought the ETF via options, and I played this on Friday and into what's today, Thursday. So I took this off on Tuesday, and then I kind of re-added the trade because I'm basically playing a breakout in healthcare stocks. So I do view this as one of the groups that can continue to do well, as long as that VIX stays basically below 40. But I think you've got a breakout here, and I want to buy dips and any checkbacks to that breakout zone. So I like this group, and a handful of names inside the ETF as well.
Well, you sent us over your TOS platform on this. So walk me through the technical case. It looks like you're viewing this as kind of a potential breakout over the last month from the range it had been trading in. Yeah.
So above 106 is your breakout level. And we hit a high of 115, almost 116, and it's about halfway pulled back. So I thought basically a 50% retracement from the breakout made sense around that 110 area, and then I'll continue to kind of add into that retest. If there is a retest of that 106, I'm a buyer into those levels even further.
And it looks like you're also looking at potential RSI, the bottom panel there, getting a little bit heated up. What does that tell you? Are you someone who gets worried if we start, rocking and the RSI gets real hot? Does that tell you to back down from the trade, or do you follow that momentum?
Follow that momentum as long as it doesn't get to something like an 80 RSI, or around even 75 would be too hot, but as long as it stays between 60 and 75, I want to continue to kind of play that momentum and play the strength.
Okay. Vertex, specifically here, one of the stocks you like. Shares just made a new high earlier in the week, pulling back a tiny bit. Doesn't even really show up on the chart because it's run so much. Same story here?
Same story here. And, this one didn't, obviously get as extended as the whole sector did. But I like this as long as it can stay above 287. So I like really simple setups. This is a really simple setup. You got the beginning of a breakout. I think it kind of stalled with the overall market yesterday. And as long as it stays above 287, I love it.
Christian, right now you've got a group that is clearly getting bid up. The biotechs overall, Vertex part of this. The chart looks pretty similar. But then the other one here in this group, Teladoc, that one's got a very clear, stay-at-home trade. What about that changes the way you view this when it has such a specific kind of thematic bid into it right now?
Yeah, I mean, this one it's definitely got a theme to play out here, which has been playing out. But I think this is going to be a trend that's going to continue. I don't think that even if the COVID cases start to come down, I think people are still going to be using this type of service in their everyday life and in the future.
All right, Christian, really good stuff. I like the companies here across the biotech space. Teladoc, Vertex. You've also got BABA on your list. We're going to do some trading here with that inspiration. Thanks for being back with us, Christian. Good as always.
Thank you.
Appreciate it. Let's bring in Tom White. Let's go through the options here, Tom. Let's start with Teladoc, and we'll get to one BABA as well. Tell me how to look at Teladoc right now if you want to be bullish, but also keeping in mind this big run. How do you hedge yourself?
Yeah, I think that's a key here, Oliver. The run that it's had up over 130% year to date with the pandemic. It's one of the pandemic stocks, right? So how do you play this if you want to be bullish, but you don't want to be overly bullish, right? You want to give yourself some cushion to the downside in case the stock does stabilize or maybe falls back a little bit. And I looked at something just really short term. Right before earnings season starts. They've got earnings on the 29th of July. So I want to do something before then. To avoid that potential big move in the stock. So if you want to play this for a neutral to bullish type trade, I'm looking at a simple short put vertical here with good probability of success. I think we talk about that all the time while staying risk defined because, this is a small float on a stock that's trading, basically 190 bucks. So how do you play that? So I looked at the July 185, 180 put vertical, selling that. You collect roughly about $1.70 credit. That's the most you can make on that with a risk of about $3.30 on it. But you're giving yourself that cushion to the downside where the break even is about 183.30 over the next 3 weeks on this trade. So really short term. And this is the way that you can do strategies like this over and over again in a name that you might like, where you might want to get long it, but you want to give yourself a cushion to the downside. Keep selling put verticals in names that you're neutral to bullish on, where you're collecting credits on a week-to-week or month-to-month basis with the expectation that it's going to remain above a specific point. You've got a probability of about over 60% that that short 185 strike is going to be out of the money at expiration. Implied volatility is near 60% for that July series, so you've got some high implied volatility and high option premiums, which allows you to collect that $1.70. But this might be the way to play it. Give yourself that cushion to the downside while still being bullish.
All right, selling the put spread. 180, 185 strikes. Let's switch gears. Let's go to the other one. We didn't get into the technical details, but Christian also likes Alibaba after drop 2% this morning. Maybe a little buying opportunity here. How would you set it up if you wanted to express a bullish view?
Well, it's gotten some price target hikes out of the analyst community. If you think Alibaba is going to continue to do well, the Chinese consumers come back pretty strong. Decent earnings report last quarter. How do you play that to the upside? Well, taking that same theme where I'm doing something relatively short term, but I want to give myself a good risk reward scenario in this for a grind higher in the shares of Alibaba while still giving myself a nice range. So I looked at buying a call condor. So it's all on the call side out in the July cycle, so 3 weeks till expiration, where I'm buying the July 25, 32 to 25 235 call vertical. So $10 wide, I'm buying that call vertical. And then to reduce some of my costs in it, I'm going to sell the 245, 255 call vertical above that. Now, the debit that I pay is roughly just under $3, about $2.90, maybe even a little less with the stock down here a little bit. But that takes my break evens on this trade. If I pay $2.90 debit, that's the most I can lose. About 227.90 on the downside. And then I'm profitable all the way up to 252.10, which would be a big swing of over $25 above the current share price. So you can see there from the risk profile, I got a nice wide range between that 228 basically and 252 to the upside. But if I'm paying only $2.90 on a $10 wide call vertical, then basically my reward is going to be just over $7 on that if it's in between 235 and 245, but I'm still profitable between 228 and 252 on a trade like this over the next 3 weeks, really short term.